Oi, oi, oi! What's going on, guys? Woohoo! Nvidia! Yet again, another stellar performance. It appears the Blackwell chip has been blowing out records. Cloud GPU selling out. This past week, I told you we need earnings to not just beat expectation, but we need it to be like wow. Okay, it's wow. Revenue for the 3 months to October jumped 62% to $57 billion, driven by demand for its chips used in AI data centers. Sales also, sales, okay, not just revenue. Sales from that division rose 66% to more than $51 billion. And you know what is the icing on top of the cake? Fourth quarter sales forecast in the range of $65 billion. Also, top estimates. Really, really good. These are the type of numbers we're looking for. Oh my god. It's make me so happy because this morning when I woke up, first thing I do is I check my phone and there's like a trading view pop-up widget there. And I'd expect to see BTC would be at like 86k, 85k, Nvidia would be at like maybe 170, 160, but no. Then I knew already. I didn't even have to read the headlines. I knew they did pretty well. This is what Nvidia has just been doing, man. They've been holding it down. This market is way too epic. It's so funny. It's so funny because it's so full of action. Okay, now here's a crazy thing. Nvidia, really good, right? This was the earnings call. Ooh, shot up. Peaked to as high as 198. Now, what about Bitcoin? Okay, slight pump. But, okay, it's enough to put me at ease, but it's not impressive, man. It's not impressive, okay? So, I got a question for you. Why would you buy Bitcoin? And why would you buy Nvidia? Okay, let's look at how investors are going to see it. Say you are a rich investor. You got billions of dollars in your portfolio. You're looking to deploy. Okay, first and foremost, I think this investor, he'll look at the numbers. He'll say, wow, Nvidia, there's a demand for this. There's clearly a big demand for this. Look at their investment. Look at their sales. They're going out that door, right? They're completely blowing everything apart. What are you going to do though? From here on out, are you going to be investing in Nvidia because of the benefit that Nvidia has in the sense that its earnings are great and it's doing really well? So naturally investing in Nvidia is going to be the next thing. You're expecting another leg up for Nvidia? Or are you going to be investing in Bitcoin because Nvidia did good? Okay. Are you going to be investing in Bitcoin because Nvidia did good? Now, I did hope that this is going to be enough for Bitcoin to mark up, but dude, nearly $4 billion has left the spot ETF. Where are those guys going? Why would you sell now? Why would you sell before Nvidia news announcement? Peter Thiel sold his stake, right? I would be surprised if he doesn't know that the Blackwell sales are in fact going crazy. So why would he try to keep his stake and take advantage of a 4% move up within the hour for Nvidia? All right, which is what Nvidia is now. Think this is what's happening tonight because this happened after market close. The current price, the market close price is 186. This is pre-market. Tonight will be the opening of US markets. They're going to have to react to this news, okay? And also you have even bigger news tonight. We have another big news that you need to be expecting, which is the non-farm employment change, unemployment rate, and our average hourly earnings. And this is still just September's reading. This is not October's. We'll dive into that in a bit. But what I'm thinking is tonight, maybe it could be a sell the news type of event. When you think about it, because if things are gonna go, into the pan in the short term, if things are not gonna be looking good, because we're still uncertain, right? The world is still uncertain. We're lagging behind about more than a month and a half, because the Bureau of Labor Statistics, they have to wash up those data up, and they're taking their sweet ass time. I think this can be like a sell the news type event, maybe at least for tonight, right? This would be one opportunity for market participants to get rid of that stock at a very good premium price. This move on the upside for Nvidia is going to give people a reason to sell, I think. Okay, but more importantly is tonight's data. Okay, You have to take into consideration that tonight's data is just off of September's reading. We don't have October's reading yet, and that's a more bigger picture. That's an even bigger picture because that was when the U.S. government was in shutdown. A lot of crap happened during that day. October's reading will come in on December, I think 6th, December 5th, December 6th. Will come in. Oh, it used to be on December 6th. Did they move it again? They moved it again. Oh my god. Oh, no. Wait. Today's November 20th. Unemployment claims. Yeah. So what about October's reading? When is that going to be? Oh, did they push it up? Sooner? Ooh, look at this. November 26th, unemployment claims. I think this will be based off of October's reading. Alright, so they're speeding things up, okay? But in any case, we're behind in terms of data. The market is still in the dark, okay? Can't really make a decision off it. And based off of last night's Fed meetings, it seems the tone for the Feds is they're insisting on holding the rates, which means no rate cut. What's the odds now? It's like 2/3 already that is no rate cut. Yeah, oh my god, 70%. 2 hours ago it was just 66%. Now it's 70%. Okay, so the tone from the Fed suggests they're gonna hold the rates at 4%. I think just pricing in now. No rate cut. Okay, but they also have to look at labor market data. Not just tonight, but also for October's reading, which will come, I think, as soon as November 26th for the next unemployment claims, assuming this is for October's reading. Okay? And if they're saying that the labor market is weak, then they're going to have to do something about it by cutting rates. That's the only narrative we have got going on for crypto, for Bitcoin to pump back up towards 100K. Honestly, that is the only narrative we have. Okay, it can be a good thing if they see that the labor market is weak, then they'll cut rates. But the issue is if the data comes out and it shows that it's much weaker than they anticipated. We're not talking about just weak, but like really weak. A lot of unemployment are happening, less jobs opening. Then it will mean that the topic of recession will be taken seriously amongst these people. And that's where the Fed will then have to cut really aggressively. Now that might sound really good, but then if they cut really aggressively, it would kind of show that kind of undermines the Fed's processes and inflation is going to shoot up. So what's going to happen? We're back to square one. All right. It's like you have to juggle between these two and the Feds don't know, they don't know. Situations are really bad right now. All right, but what are the takeaways from last night's minutes? You can pull it up here. This is the full file that you want, but we just went ahead. Go to Ask Surf. If you need the codes for 3 pro trial prompts, drop a comment down on my Twitter, and we'll give you codes. We have codes, but basically, give me the TLDR of the minutes. How this would impact Bitcoin and crypto market. So. They talked mostly about will end quantitative tightening. Yeah, okay. However, the minutes revealed significant internal divisions, with many officials viewing December cuts as likely not appropriate due to persistent inflation risks. You can already see an internal division within the Feds. I think more than half of them are already switching up their tone, which is very weird because they were all for cutting the rates 2 months ago, but suddenly they switched their tone and saying, no, I think we should be holding. And you know what's even crazier? It's going to be even crazier if suddenly, and this will really hurt us, this will really hurt crypto, is if they suddenly decided they'll raise interest rates. You don't see that here on the bets that they're going to be raising interest rates, but they have every power to do so if it favors them. Okay, based on the majority of what they think. Dude, that's going to be a complete turnaround. That's one plot twist you don't want to see coming, because we're going to be the victims if they decided to raise interest rates. I hope that's not going to be the case. So let's just assume this is already being priced in, that we're not going to get rate cuts. That they're going to hold the rates at 4%. Okay, the takeaway: policy actions, 25 basis point reduction. That's in the discussion, but they're focusing more on balance sheet. Yeah, ending QT, stabilizing holdings at $6.6 trillion. That's their asset on their balance sheet. Forward guidance: deep divisions on December cuts amid stalled inflation progress and resilient labor markets. Economic assessment: growth, moderate expansion despite 44-day government shutdown, creating data fog. Like I tell you, we're lagging behind. It's like these people need to clean up their act fast. They need to wash those data up fast, and they need a lot of time. Employment: job gains slowed. No shit. You saw the beverage curve. Employment is higher than there are job openings as of August 2025. Unemployment edged up but remains low through August 2025. We still don't have October data. Government shutdown. Okay, we need that. Inflation rose since early 2025, showing little sustainable progress toward 2% target with tariff-related upward pressure. This is the part that is making it so that inflation is sticky, and they're really scratching their head on how they're going to go about this, which is why I think they are really pivoting towards labor market data. So that's why tonight's news will be big for September, but even more so for the future ones. I think as soon as November 26th, that will be possibly a reading into October's data, which is a much bigger picture that you need to be paying attention to. Okay. Now, in other news, this one really scared me. This morning when I checked the yields for Japan, oh my god, it's at 1.81%. Do you have any idea just how scary this is? Okay, look, yesterday live stream 1.77%. Overnight it shot up to 1.84%. That's way too high. That's way too high. This is the Japan government bonds 10-year yield. It's way too high, brother. You know what this means? It means the Japanese will inflate the market with dollars, with US dollars. I think they're going to be purchasing a lot of US dollars. Let's see where USD JPY now at. 157.69. I think they're going to keep buying a lot of dollars because their goal right now is to try and reduce their debt to GDP ratio. Okay? And how are they going to do that? Stimulate the economy. And we've already got an aggressive prime minister in Japan who's preparing themselves to do that. But the problem is, for Japan, you've got inflation causing a bit of an issue. Wage inflation is another issue. And on top of that, the dollar, right? It's rising against the yen. The main thing that is really problematic is the yields. You just need to look at the yields and you can already tell this is like, it's behaving very weirdly. It's behaving very, very weirdly. This is not sustainable. How are they going to reduce their debt to GDP ratio if you got a yield like this when yen is looking like a meme coin right now? Okay, this is just yen. Look, all-time low. Oh my god, how low is that? Yikes. Very scary, right? And if they don't do anything about this, the yen will break. The yen will break. It really will. If it's not broken already, it will break. And they need to be aggressive on that side. Do you understand the implications of what we're looking at right now? For that part, we still don't have a clear picture for how Japan will treat Bitcoin into play. But one thing's for certain, how are other investors around the world going to be looking at this story of looking at the yield so high and yen so cheap, and with the upcoming interest rates decision for Bank of Japan in December, how are they going to view this story? So, as I've said, you can clearly tell the traditional Wall Street people don't care about Bitcoin. They like it, but they still view it as a volatile asset. Yesterday, net inflow, great, but the outflow is still very heavy. They're selling Bitcoin, okay? And if the majority of Wall Street, we're not talking about Michael Saylor. Michael Saylor is doing his own thing. Tom Lee is doing his own thing with Ethereum. But we're talking about, your average boomer, okay? These are the guys that with the suits and all that, and they only care about the dollar value of their portfolio. Let's assume that most of the people that are dumping Bitcoin right now are those people. They only care about fiat, right? How are they going to perceive this story of Japan raising interest rates and their yields so high if institutions continue treating Bitcoin as a volatile risk asset rather than a gold-like hedge? Because for you and me, we're crypto people, we view Bitcoin as a hedge, right? Yeah, it's volatile, but the bigger reason why we like Bitcoin, because it's scarce. It's limited. It's limited in supply. 21 million in circulation ever, right? That's Michael Saylor's thesis as to why Bitcoin is just so good. There's no top for Bitcoin because fiat has no bottom. But you can't assume all investors around the world are thinking that way. they only care about fiat, right? So they're not looking at Bitcoin as a hedge. They're just treating it as a volatile asset. Okay, the same way you and me, we treat meme coins as a volatile asset, right? It's all about perspective here, boys. So if they treat Bitcoin as a volatile risk asset rather than a gold-like hedge, Japan's unraveling creates severe downside risk for BTC. Here's why. The 20 trillion yen carry trade has institutional money borrowing cheap yen to fund higher risk assets like Bitcoin. When Japanese yields spike, currently 1.8%, and force unwinding, institutions dump BTC first as their most volatile holding. They're going to get rid of it. We're already seeing this on BlackRock, right? Well, granted, yesterday was net inflow, but bro, this is funny. HODL, their this SPY ETF ticker is HODL, and you have outflow. Like, this is not hodling, you know? But what does it mean? Okay, historical precedent is brutal. August 2024 carry unwind. That was when BTC went from 65K to 48K within 2 days. Super scary, right? Saw Bitcoin crash 25.8% in just 5 days. While gold actually held up. Gold actually held up during that 2024 August unwind incident, right? Current institutional behavior confirms this. 2.9 billion in BTC ETF outflows over the past week as institutions rotate to safety, according to Morningstar research report. Bitcoin's correlation with the S&P 500 has hit 0.5 to 0.6, meaning it amplifies equity sell-offs rather than protecting against them. With $67.5 billion in open interest and rising funding costs, leverage positions face liquidation cascades if Japan triggers broader risk-off moves. Bottom line, until institutions shift their view of Bitcoin from volatile tech stock to digital gold, any yen crisis will hit BTC disproportionately hard. Potentially 10 to 20% drops as we approach the critical USD JPY 156 to 160 Forex intervention zone. Okay, so this is just how I'm viewing this story. If these institutions, retail clients of these institutions are selling their Bitcoin, what does this mean? They don't have the same vision as Michael Saylor. They just still treat Bitcoin as a risky asset. So they're going to offload. They're going to seek safe havens. They're going to buy gold. That's why gold is like climbing now, right? Why is BTC just slumping? You know what I mean? So that's the very simplified story that I have for what global investors are viewing Bitcoin right now. You have to understand this. It's all about perspective. And I think it's much simple for me to think, oh yeah, the fact that US debt is at 37 trillion and they're still printing even more money goes to show you fiat is here to stay during our lifetime. It's just much easier for them to print more money and then leave the problem of the debt for future generations. That's going to be your children. That's going to be your grandchildren. But they don't care, right? So they're just going to focus on fiat. Look, case in point. Interest rates are not affecting Nvidia at all. Nvidia is super cash rich. Super cash rich. If you tuned in to the earnings call last night, that's crazy. If you tuned in to the earnings call last night, their return on equity is 121%. You know what that means? It means for every dollar they spend, they make 121% of that. You spend money and you make money. What? How's it going, guys, on YouTube? Yo, Duke. Yo. Okay. So it's not over yet. Though we have one major catalyst out of the way, you still have labor market data to look forward to and to be cautious around your position. And in terms of where BTC is at right now, look, we did not reclaim 93K at all. 93K was our support, now flipped into resistance. Look at the daily. 93K as support because market found balance here after breaking out the tariff lows in April. Found balance here for 2 weeks, then continued to send up. Completely violated. Completely violated. And on the 4 hours chart, I told you, retest, rejected. Off of last night's news, it didn't even come close to try to retest. It peaked at 93 this hour, 2 hours ago, I think. But yeah. Okay. So it's going to be short and sweet because I got to go now. I need to pick up my visa. Note says, Stimmy checks got postponed to mid-2026. Japan technically can't sustain this yield, but if they print yen and pay users, then it's possible. Yeah. But the more important question is how they're going to perceive Bitcoin. I think everyone around the world, these people, it's Wall Street season. They still treat Bitcoin as a volatile asset. You and I, we see Bitcoin as digital gold. But do they see it as digital gold? No. Right? The only reason they're plowing money into the ETF and they're getting into crypto is because they see the year-on-year returns for BTC. It's really, really good, right? But fundamentally, they don't understand Bitcoin. All right? See where we're at. Let's look at the monthly returns. Because it's 20th of November now. We got about 10 days left for monthly close. And it's red November. Holy, holy, holy. Okay. TLDR, I would say with everything going on right now, it's so much noise. It's going to be bearish short term because there's just so much uncertainty in the market. The data is lagging behind by 1 month. So if we are throwing out the 4-year cycle out the window, right? 4-year cycle is no longer a thing. Then I would say the bull market is just postponed. It's not over. Okay? It's completely different. Alright, boys, take good care of yourselves. Like this video. Subscribe to my channel if you have not already. I'm going to be in Bali in the next week. I'll be streaming there, but I think it's not going to be consistent time. So I'll let you guys know, heads up, before I stream. And then let's chat there. It's going to be fun. It's going to be hella sexy. Note says, now my portfolio started falling 25% down. My alt bags overall, not much. 25% down is so much better than 70% down, brother. That's my alt bags. All right. My name is Ron.